All right, let's talk about a name you know. AstraZeneca. For years, this company was front and center. A household name. It was all about the COVID-19 vaccine. People couldn't stop talking about it. The news, the headlines, your neighbors. But here's the deal, folks. That's old news. That's looking in the rearview mirror. Smart money, your money, needs to look forward. What is this company doing now? What is it doing today, August 23rd, 2025? We need to dig in. We need to do the homework. You have to know what you own, and AstraZeneca is a complex beast. It's a global biopharmaceutical giant. Oncology, rare diseases, biopharmaceuticals. That's where the real money is made. The game has changed. The pandemic spotlight has faded. Now, AstraZeneca has to prove itself on its core business. This is a story of transformation, back to diversified roots. All right, let's get down to brass tacks. The numbers. The latest report for Q2 2025 just dropped. Total revenue, $12.9 billion this quarter. Nearly $13 billion in 3 months. Let that sink in. That's a powerful engine. That's a 14% increase year over year. This isn't a sleepy, slow growth company. This is a company with its foot on the gas. Growth is coming from heavy hitters, especially oncology. Now, what about profit? Reported EPS, $1.92. But core EPS, the cleaner metric, was $2.15. That beat Wall Street's expectations. When companies beat, stocks often get rewarded. Look for the lift. Management is selling more drugs and managing costs. They're running the business efficiently. Let's break down revenue sources. Oncology revenue, $5.3 billion. Tagrisso, Imfinzi, Lynparza. These drugs are driving the growth. It's not one trick. Other areas are strong too. CVRM, cardiovascular, renal, metabolism, respiratory, immunology. The numbers show the core business is healthier than ever. That's the foundation for dividend potential. That's a win. Now for the main event, the reason we're all here, the dividend. You want to get paid to own a stock, right? Of course you do. It's the ultimate reward for your patience and your capital. So what's the deal with AstraZeneca? The company just declared its latest dividend. They are paying out an interim dividend of $1.05 per share. They traditionally pay in 2 unequal chunks. For the full year of 2024, the total dividend was $2.90 per share. Management has guided for a total dividend of $3.10 for the full year 2025. That's a 7% increase, a clear signal. Infographic showing AstraZeneca dividend per share for the last 3 years upward trend. The dividend yield is the annual dividend divided by the stock price. It's the return you get just from the payout. As of today, August 23, 2025, with the stock trading around $80 per share, that $3.10 annual dividend gives you a forward yield of about 3.87%. Now, that's a respectable number. It's higher than the S&P 500 average. It's a respectable, solid yield that puts real cash back in your pocket. This is a tangible return, and a growing one at that. Nearly a 4% starting yield plus dividend growth. That's the core of the investment thesis. How does a giant company like AstraZeneca keep the growth train chugging? How do they attract new investors when there are so many options? It boils down to 2 words: innovation, expansion. This isn't your grandfather's pharmaceutical company. They are pouring billions into their pipeline. Next-generation cancer treatments, antibody drug conjugates, new therapies for rare diseases. These are areas where you can command premium pricing and address huge unmet needs. Innovation is their lifeblood. Their strategy is deliberate and smart. They don't invent everything in-house. They buy the best-in-class assets. Look at their acquisition of Alexion. That move made them a leader in rare diseases. This keeps their pipeline fresh and exciting. Often a faster, lower-risk path than starting every project from scratch. Then there's the global reach. United States, Europe, emerging markets. China is a huge growth driver. They built the relationships. Sales force on the ground. This gives them a massive runway to sell blockbuster drugs to new customers around the world. So what attracts new investors? 3 things: pipeline, M&A, and emerging markets. They are building a fortress of innovation and global scale. No company is an island. You have to see how AstraZeneca stacks up against the titans of industry. Let's put it in the ring with Novartis. Both are huge and diversified. So let's look at the tail of the tape. AstraZeneca's second quarter revenue grew by 14%. Novartis posted revenue growth of about 10%. Both are strong, but AstraZeneca has the edge in top-line momentum. Advantage: AstraZeneca for now. Where is that growth coming from? AstraZeneca's oncology franchise is growing at over 20%, a high-octane engine. Novartis is more balanced and perhaps a bit more conservative. They each have strong franchises: Kesimpta, Entresto, and more. AstraZeneca's oncology focus gives it a higher growth profile, but a key trial setback could be painful. We know AstraZeneca has a forward yield of around 3.87%. Novartis yields about 3.6%. Close, but AstraZeneca has a slight edge. Both companies reward shareholders. Solid income options. AstraZeneca's recent 7% hike shows more aggression in capital returns. It's not a knockout, a decision on points. If you bet on the jockey with the hot hand, right now that's AstraZeneca's leadership. Okay, let's get real. No stock is a guaranteed winner. There are always risks. You have to know the bear case as well as the bull case. What could go wrong for AstraZeneca? The biggest risk in pharma is the patent cliff. Blockbuster drugs don't last forever. Patents expire, generics arrive. Cheap generic versions flood the market. AstraZeneca has several multi-billion-dollar drugs, and the clock is ticking on all of them. The company's future depends on its ability to launch new drugs to replace old revenue. If their pipeline has a few high-profile failures, the growth story could stop. Competition is fierce. Merck, Bristol-Myers Squibb, Roche. They're all pouring billions into cancer research. A new, better drug from a competitor could erode market share quickly. Then there's government regulation and pricing pressure. Governments are big buyers and always looking to cut costs. New laws could force price cuts. That would directly impact revenue and profitability. They have to keep innovating to stay ahead. Their M&A strategy and cash flow give them tools to defend against patent cliffs. They're building the blockbusters of the future today. For investors seeking growth and income, AstraZeneca checks many boxes. Know what you own. Do your homework. But this one looks like a winner. It's a buy, as long as you understand the risks.